Hello, everybody. Jason Thibodeau here, Matt Morrell with JMJ Financial. I'm in Huntington Beach, California. Matt's in the Boise area in Idaho. So today we have joining us Mary Kate with Coastal Oak Insurance. If there's a hotter topic other than interest rates and what real estate property values are going to do in our industry, it's insurance. So homeowners insurance right now. I'm sure, unless you've been living under a rock, you've heard about that. We're going to get into the details and some of the hot topic issues that people want information on. Of course, there's a lot of misinformation out there, whether it's the mortgage industry and obviously, in this case, insurance as well. So we're going to dive right in. Mary Kate, welcome to the podcast.
Thanks, guys. Thanks for having me.
Good to have you. And for those that don't already know, Mary Kate helps a lot of our clients. We refer her a lot of our business. As a broker, she's not dealing with just one platform like a lot of the larger captive agencies are. And with, a lot of the larger insurance carriers leaving, it's more important than ever right now to have more than just one platform to potentially look at as an option. You might be buying a rental property, a single family home within an HOA, in a condo community, in a high fire risk area, in a flood area. There's all kinds of moving parts when it comes to insurance. Who's still writing in California? So we're going to dive into that. But before we kind of go into the granular detail, can you just kind of give us your general consensus and high level overview, we call her MK, of what's going on in the insurance industry?
Yeah, absolutely. I'll start off by saying this is mainly pertaining to California. I can see it kind of spreading out to other states, and there's other states that have a hard time, like Florida, Louisiana, with insurance, but specifically right now, California is having a very hard time. So what we're seeing is carriers really not being able to afford to stay in the state to insure homes. And so there's lots of reasons for that. Obviously in California, we're prone to wildfires. That's a big part of it. The other part, the reason carriers are leaving completely, that we kind of know in the insurance industry, is really due to them not being able to take rate increases, starting around COVID time. So the insurance commissioner and their office was really trying to understandably help the consumer. And so when carriers were requesting these rate increases in order for them to raise premiums, they were getting denied. And so what happened with that is essentially they're getting denied, and then now they're saying, okay, well then we're not insuring in the state of California. And so that's really what happened. Now, these rate approvals are starting to get approved. They are, State Farm, for example, just got a 20% approval like last week, 2 weeks ago. So it's starting to happen. And what we're hoping is now hopefully these carriers start coming back. I think the commissioner's office is hopefully thinking, we scratch your back, you'll scratch ours, like please come back to the state. So that's really the main reason. But, of course, the rising cost of construction, the wildfires, like I said, the cost to reinsure, like insurance companies have to insure themselves as well. All of that is on the rise. So there's lots of different variables, but the reason we saw that influx of carriers leaving, and that's why it's so difficult to find coverage, is really due to them not being able to take those increases that allow them to stay in the state of California.
Yeah, it's encouraging to hear that State Farm got that increase approval. Like, I know we might be jumping ahead a little bit, but if you had to guess, and obviously speculation and all that, but what would you say an end date or a turning of the corner would be? What's on the horizon? Like, are we a year away from normalization? Are we 2 years away from normalization? Are we never going back to normalization? Like, what does that look like, in your personal opinion?
Personal opinion, I say 2 years. I see things starting to move, and all of the other brokers and producers that I talk to, we're all saying at least a year. Like, that's minimum. That's like perfect world, a year. I'm thinking 2 years, that's a lot. a lot to figure out to come back. A lot of carriers left the state. There's a lot of underwriting, a lot of regulations that have gone into place, and I don't necessarily think that that's going to go back to normal anytime soon. They're making it pretty hard to write insurance in the state of California, so I don't think that's just going to, switch over quickly. So my personal opinion is at least 2 years, but minimum 1.
And I got one more thing, Matt. Sorry, feel free to jump in after this, but can you kind of like give me your personal experience? Like being a broker, are you busier now because of this? Like who are some of the obvious or bigger names that everyone would recognize that don't currently write in the state of California?
Yeah, absolutely. So just like you said, I'm busier than I ever have been. The broker model, really blessed that that's what we're in. If I had had a State Farm agency, for example, I would not be able to write any property business at all. Wow. So I'm really lucky in that sense, busier than we ever have been. I'm writing with the only carriers that are left in the state. I feel very lucky for that. And as far as the carriers, it's everyone you see on the TV, which cracks me up. Like I see all these commercials, like they're paying these billions of dollars of advertising. And I'm like, they're not even writing. Like it makes me laugh. But State Farm, Farmers is still writing some, but they've really lowered their amount. So I'm going to throw Farmers in there. Allstate is not writing property. Progressive is really hard to get a property policy.
Is Geico writing or?
Geico is not writing property. They'll write a few, but not writing much at all. There's even the smaller ones. So that we've got like Aegis, Stillwater, these smaller carriers that people don't even realize are great insurance companies that provide coverage, but they have also had to pull out.
Safeco.
Safeco has limited their quantity. They are still writing, but what they're doing, because they're part of the broker model, is they've just cut off agencies completely. Wow. So a lot fewer people are allowed to write business with them.
Are you seeing any of these companies, MK, not renew people?
Yeah.
Like literally dropping clients also?
Yeah. So Nationwide's a big one that's doing that. That's like a really big company. They're all kind of doing it. They're all being picky. But Nationwide, for example, is doing that. Your carriers like Mercury, if you have a renewal up, they're going to send you a notice that says, if your home was built, I can't remember the exact name, let's say before 1985, we need to show updates that plumbing's been updated, electrical, we need 4 sides of every, we need pictures of every side of the house. And that's just to get your renewal, even if you've been with them for years, that's just to get your renewal to be able to stay with them. So
that's incredible. So I'm not going to ask you to divulge what carriers are writing, because I want people to just think Mary Kate when they need insurance. You know who's writing? Mary Kate's writing.
Postal is writing.
We need to get you on the Super Bowl ad in February. It only costs $30 million. Let's do it.
No big deal.
But I guess the messaging here is, yes, it's challenging, and this is an entirely new landscape. But the good news and the silver lining is a broker like yourself, MK, can still write in the state of California, right? People are still buying homes, which of course require homeowners insurance, assuming you're not paying cash, right? If you're getting a loan, you need insurance.
Exactly.
And we're sending them to you and successfully getting this done. So just to reiterate, we can still get insurance in California.
Absolutely. There's still your standard carriers that are writing. There are excess and surplus lines too. So that's not your standard carrier. I don't need to go too far into that, but there's carriers available. Might cost a little bit more, take a little bit longer to write, but they're there. And then when all else fails, there's the FAIR plan, which is essentially a government-created insurance that provides coverage when a standard carrier won't, and they have to. So we write that a lot in high fire, but we're seeing if you had claims on your home and you can't get insurance, we have to write the FAIR plan. There's certain instances that we wouldn't normally write that government created insurance, but we're writing it more. But that's okay. We have a way to do it. We write them all day. and you can absolutely still get insurance, even though it feels like everything's falling apart.
Yeah. And the FAIR plan, how does the cost of that and coverage amounts compare to a traditional policy?
So the FAIR plan, I like to think of it as like an a la carte policy. There's important coverages that it does not include, but we write a supplemental policy to cover those. So like liability, theft, that kind of thing that is not covered. And we call that a difference in conditions policy, or a wraparound. So if you had to go with the FAIR plan, that's going to cover you for fire, wind, hail, lightning, explosion, vandalism, malicious mischief. It covers a lot. It's not going to cover you water, liability, and theft, and that's what we write a second policy for. But the FAIR plan itself, I get to go in, I figure out the reconstruction cost of the property. I get to just type in the coverage that I want. Your belongings on a standard policy, like, is normally the minimum is like 50% of what your home's covered for. So let's say your home's covered for $500,000, your personal property is usually $250,000. On a FAIR plan, I can go in, and if it's a small home up in the mountains, they're not there that often, I can put in $50,000. So sometimes it's now, especially in the industry, the prices are pretty comparable. It's not a big jump from a standard policy, just because we're seeing approval starting to get increases starting to get approved, and the carriers that are still writing in the state have those higher premiums because they can afford to stay in the state. So the price difference isn't actually that much at all now. It used to be definitely a jump, but
the FAIR plan is interesting. The FAIR plan is interesting too from a mortgage and a home purchase perspective, because in my experience as of late, it does not move quickly, and so it can really impact the timeline on a new home buyer meeting their deadlines for loan approval, for closing dates. And so this FAIR plan is creating some hiccups from a timing perspective, or it could potentially. It's important to get ahead of that early on in the transaction, right?
Yeah, I mean, even if you're not doing FAIR plan, the first thing now, as soon as you get into escrow, insurance is number one. I don't care if it's FAIR plan, I don't care if it's down the street, not a flood zone, not a high fire, or it's up in the mountains in a high fire. That insurance should be the first thing you're doing because of the vulnerability of the market right now. Yeah. And FAIR plan does take longer. It's a manual underwriting process, so we submit an application, we have to submit pictures. It's definitely a tedious process. But if you're on it and getting it submitted, and it's even a 21-day close, we can get a FAIR plan done. Insurance should be number one for sure to get that issued, because it can take anywhere from a day to 7 days to hear back from the FAIR plan.
Yeah, and that's a big change. And it's not just the FAIR plan, correct me if I'm wrong, MK, like back before COVID, when we were, closing transactions and needed insurance, which is 9 out of 10 times, sometimes we'd be in a pinch because the homeowner just simply didn't do anything with trying to get insurance handled throughout the escrow period. And then once we were made aware the insurance wasn't figured out, I could call you or somebody, and within that same day get an evidence of insurance, right?
Yep.
And it wasn't an issue. Whereas today, that's quite the opposite. And it's not just FAIR plan. Are the traditional carriers also taking their sweet time?
A lot of them have to go to underwriting. They do, like, if there's a claim on the home, we might have to submit proof that it's been fixed. That kind of thing. So it can take time. There's definitely still carriers that we can get same day bind, same day evidence of insurance. That is still available. It just has to be a perfectly tied with a bow. It's here you go.
Yeah,
and it's a perfect, yeah, exactly. But it is out there. But yes, to your question, even the standard carriers, it doesn't have to be FAIR plan for it to take longer than it used to.
You said something earlier about claims being an issue. So when someone's buying a home they don't already own, correct me if I'm wrong, the potential insurance provider is still looking at this property's history of whether or not there are claims, and that could potentially throw a wrench into things, right? A busted pipe and water flooding and the repair that ensued after. And maybe it's already something that happened in the past and has been fully resolved. But that's still kind of a red flag or a problem. Is that correct?
Yeah, especially water. So claims follow the home. They also follow the person, but they follow the home. So if you're buying a new home and you come to me and I go to quote your policy, I'm going to pull a report. The carriers pull reports, and they pull claims from the past 5 years. And typically that's going to affect your premium. So if there's more than, let's say, 2 water claims in the last 5 years, that's probably going to be denied by a standard carrier right now.
So all the more reason, just do this stuff up front on day one of escrow to figure out what's up.
Yeah, exactly. Yeah, and then there's some claims that won't affect. If it was like a theft claim and it was a previous owner, sometimes we can get those excluded. It's not the end of the world that there's claims on there. We can get exclusions, we can look at it, but again, it does add to the timeline. So, yeah.
Interesting. And they follow the person too. That's super interesting.
Yeah. So let's say you were renting before you even bought. You're renting in a condo. You filed a theft claim on your renter's policy because belongings were stolen. You go to purchase your first house. When I have to get your current address or your previous address. So I pull that's going to pull on the report, and that most likely is going to affect your premium going forward.
This happened to me recently. I had a home that I owned last year, excuse me, and we had a water leak, and it warranted an insurance claim. Keep in mind, I've owned real estate since 2011. I've never had an insurance claim. I've paid my insurance every month like I'm supposed to. I had one claim in 13 years. A pretty minimal claim. Like, it wasn't much, little leak in the roof, but it made more sense to go through insurance and to pay out of pocket. And I sold that home, moved back into a home that I also own. This home was built in 2019. We're talking about a 5-year-old home right now, and they wouldn't insure me. They wouldn't renew my. I had to go to a different carrier. 13 years of making insurance payments on time, one small claim, they wouldn't renew my insurance. That's here in Idaho, where we're not having the California problem, right?
Yeah,
right.
The water claims that's like, to them, when they see that, they're like, okay, this person, if there's an issue, they're going to make a claim. That's how I think they look at it in one way. The other thing is, if it's water and it's pipes, even if it wasn't that's what's crazy, is like, even though it wasn't even that home, and you're going to apply for your new insurance policy and they're denying it on that. I mean,
well, it's crazy because it's what you just said, MK. They think that because I filed one claim, I'm somebody who's going to file a claim over anything. Well, first of all, isn't that why the insurance is there? Isn't that why I pay every month? Is so that if something happens, I can get the assistance. Yeah. And then I get the assistance. I use what the insurance is there for, and I'm penalized for it.
And if you had stayed in that home, you probably would have gotten a cancellation or a non-renewal saying, hey, we no longer want to insure you, crazy. Even if you were in that home. Wow. I'm telling people right now, I mean, I try to tread lightly, because just like you said, Matt, as an insurance broker, I literally have to tell people, if I'm please call me first, and I'm please don't make this claim. To move forward to not make the claim. Yeah, we can make it work. Don't make the claim, because it stays with you for 5 years. Even if they don't non-renew you, or you, regardless, if you're not getting non-renewed, your premium's going to go up. Yeah. So right now, with the vulnerability of the market, it's just triple check, make double check before you're making that claim.
Pay the $200 a month to your insurance company and never file a claim. What a business to be in.
What if?
Well, I mean,
we could have a whole nother episode about.
Yeah. But just to play devil's advocate on that, at the end of the day, what's the average deductible for a homeowner's insurance policy right now, MK?
Right now, for a single family home, I start at $2,500, but it can start anywhere from $500, $1,000, $2,500, $5,000.
Yeah. So in that range, probably best not to file a claim for the reasons we're talking about. And then at the end of the day, if there's a fire and your house burns down, that's mostly not only, but mostly why we have insurance, because that way, you're not filing bankruptcy and you can still pay your bills and whatnot, and have a place to live. So there is a place for this stuff with the catastrophic issues, liability issues, but if you've got a leaky roof and it's $1,000 repair, probably best not to file for the reasons you're stating, because you got to see the forest for the trees, right? You'd rather have coverage on the major league stuff and not have this one little claim ruin your options and your ability to afford good insurance.
Yeah,
so that's
exactly.
The devil's advocate side. I'm not saying I don't agree with what you guys are saying, like the old stigma of, they're good at taking our money, they're not good at getting us help when we need it. But I'm sure there's some different perspectives on that for whatever it's worth. I'm sure people don't like what I'm saying.
There might be.
Well, no,
Jay, and I've heard the people in Maui haven't gotten any insurance payouts yet, and all their homes. So
don't bring that up. No, I know obviously a lot of empathy for what everyone's going through there. It just, I don't know. It's rough.
Weird industry.
It is hard. I totally hear you on that, Matt. That's
and
great.
It is there when you need it. Like the keywords with insurance are sudden and accidental. Like it is there when you need, like something happens, that's what you're paying. You are paying that monthly for them to be there for you in that instance. So if you really cannot afford to do it out of pocket, make the claim, get it fixed. And if they non-renew you or you try to do it and they won't issue a policy, call me and we'll figure it out. There's options, I promise.
Yes, there's other carriers. I still got insurance at the end of the day, and I think it's cheaper than the policy I had before. So it does all work out. There's lots of carriers. It's a great point, MK.
Yeah, good stuff. All right. We're not going to go too much longer, but in our marketplace, Southern California, we have a ton of HOAs, condo developments, and man, we're running into some issues here. And I could cite some examples, but can you just give us a basic understanding of why there's such a problem right now with the average condo community as it relates to getting homeowners insurance?
It's quite literally the same thing with a single family home. It's just times 200 units, right? So that insurance policy is going to be a lot more expensive as we see insurance premiums increasing. That's really a big thing that I'm seeing with the HOAs. It's, here's your renewal. It's $30,000 more than it was last year. And then you're looking at assessments levied against the homeowners on your HOA so that they can afford to pay the new premium. That's really what the issues are. So they run into these issues where either they can't get a policy because maybe it is a high fire area, or the premiums are increasing so much that then the HOA board is like, whoa, wait, we can't afford this. And they come into a place of maybe their policy expires while they're trying to figure out what to do. Maybe they're saying, okay, we're going to issue this new policy, but don't have the funds to pay it. Or they're just saying, okay, well, we're going to get the bottom of the barrel minimum policy. And then when it comes to loans and the insurance requirement, it's like, wait, what are we missing here?
Right.
Like, this didn't used to be an issue. So
that's what we're running into right now.
Yeah. And and we're able to, with the condo policies that a broker will write when you're buying a new home, we're able to really, we can supplement what that HOA policy is missing that the lender is going to want to see. So when the underwriters are looking at that HOA master policy and they're getting their guidelines from, who is it, Fannie, Freddie? I don't know. I can't speak to the loan stuff, but when when they see their guidelines of like, hey, this policy needs to have this and it's missing that, that's the email I get is, hey, when you write this condo policy for the interior of the unit, can we make sure that this coverage is on there because it's required?
And just to reiterate all this, MK, and you actually stated it very well. But at the end of the day, just making sure people listening understand, when you're buying in a condo community, like you alluded to, there's multiple units. Let's call it 100 units in a community. And so the master HOA, right, needs a homeowner's insurance policy for the entire complex and all 100 of those units. And when they get the renewal bill in the mail, and they see that massive premium increase of tens of thousands of dollars just to keep their insurance where it needs to be, like you said, it goes to the HOA board. There's decisions about, my gosh, are we raising our HOA dues with a special assessment? I saw one situation where the homeowner in the community we were helping was, oh, by the way, your homeowner's insurance is going to go up $1,000 a month for the next 18 months or something stupid in order to keep insurance the way it was. And the alternative is, let's just go to the bottom of the barrel in terms of coverage to make it more affordable. Well, guess what that does? You're trying to buy a home in a condo community where that's happening, and you're getting a loan from Fannie Mae, as an example, or pretty much any lender has insurance requirements in condos, whether it's Fannie or somebody else. And they're reviewing these condo documents, they're reviewing the insurance, they see that the coverage is completely inadequate, right? And now it's like, oh, this is not lendable. We can't lend in this community. I think the solution you're referring to is, and correct me if I'm wrong, you can bridge the gap for them on an individual basis for that particular unit. Is that accurate?
Yeah, it really depends on what coverage we're talking about specifically. But in most instances, yes, we can do that. But not every broker is the same. I request the master docs on every condo policy I write. You're not going to find that everywhere, where they're just going to issue a condo policy and say, this is what I can do. Yeah. So it really depends on the situation. And, for me, I work very closely with lenders like you guys, where I can talk to an underwriter or talk to, whoever it may be, so that we can get on the same page with the policy. So I think that's just an important aspect of it, is having the right person that's looking at that if you run into that situation with the HOA and you're buying something in there. Because not every insurance agent, maybe they don't want to take the time. Like I will be honest, like condo premiums, not the highest, and you're asking them to go through documents and look at what's missing and then bridge that gap. Some may say, that's actually not a policy that I'm going to write right now. So it's really about partnering with, the right broker or agent, so that you're someone taking the time to actually look at it closely, because it is an issue. It is an issue right now.
Yeah, it's important that people understand. This is just my personal outlook on business. Whether you feel mortgage or insurance are both commodities, there are reasons why it is critically important that you find a professional in both mortgage and insurance, where they have an advisory mindset and it's based upon a relationship, right? Somebody that's local to the community, that's got a good reputation, that's committed to that community, and it's focused on reputation, relationship, because at the end of the day, that's going to matter a heck of a lot more when we're trying to figure out these solutions. If you're dealing with somebody that you saw an ad for from Geico on the Super Bowl commercial, that's a transactional situation. They're going to do minimum effective dose, and they're not going to care whether or not it works out, right? Because they don't have to answer for anything. They don't have a reputation to uphold in the local marketplace. So yes, is mortgage insurance both commodities? Yeah, but at the end of the day, can the right relationship make all the difference in the world and change your life for the better when you're trying to buy a home? Also, yes. Yeah. Take that for what it's worth.
Absolutely.
Cool. Well, I think we kind of covered anything. Matt, was there anything on your list that we may not have addressed?
No, we covered it. Nice work.
Yeah. And the encouragement would be, obviously, everyone's got a unique situation, their own specific circumstances. Nothing's one size fits all. Talking about advisor and relationship approach, that is Mary Kate, and that's why we have her on. And as you can tell, she's communicates well, cares, and is well informed. So the encouragement to people in our marketplaces that need insurance, call Mary Kate, and that's with Coastal Oak Insurance. All right, thanks so much for listening, everybody. Any last words, you two?
Thanks for your time, MK.
Thank you guys for having me.
30 minutes on the dot. We did it. Thanks, everybody.
Good day.
Bye.
Have a good day. Bye.